Alright, what's going on everybody? Today we're going to be talking about a very important pattern when reading candlestick charts, which is the 1-bar reversal pattern. So let's take a look. And before we go any further, let's also keep in mind that this reversal pattern works on both up and down trends. But for the purpose of this example, let's go with an uptrend. So what we will see is this candle in particular gapping up from the previous day and opening at a point which is higher than the previous candle's high, including the wicks. Over the course of the period, this gap gets filled, and in fact, we'll even see the bearish momentum continue to a point where this candle in particular closes at a point which is lower than the previous period's close. This constitutes very bearish price action, especially when coupled with support and resistance levels, essentially indicating to the trader that effectively these important support and resistance levels still hold some weight in the market. It's really important to be able to identify these types of candles, but to be noted, they don't specifically represent entry points. This type of price action simply gives you insight into the current market dynamics and the fight between the bulls and the bears. So as with anything else in technical analysis, things are never black and white, and it's always best practice to use multiple indicators in conjunction with one another in order to have the best odds of succeeding on your side. So now that we saw the 1-bar reversal pattern, I also want to take a moment to talk about the 2-bar reversal pattern, which is quite similar except for a few key differences. So in similar fashion to the 1-bar reversal pattern, the price action is going to show signs of exhaustion. And in a similar fashion, it's much more effective if this is seen at a top or at a low or at a significant support or resistance level. So what we want to see for this pattern is the first candle to show a lot of strength, for it to make a very large and decisive move in the same direction of the trend. We also want to see this candle to close at its extreme, meaning that it's showing a lot of confidence in its move. But then what we'll see is that the second candle is going to completely negate the impressive move that we saw in the first one. So what we want to see is for the second candle to open at the same price that the previous one closed at, then for it to entirely retrace the move from the first candle, for it to then close near the same level where the first candle opened. Thus, as I mentioned previously, entirely negating the first bar's price action. As with the 1-bar reversal pattern, this one should only be read as an indicator that the market is currently being indecisive, that there could potentially be a reversal at play, or in other words, a change in the direction of the trend. And of course, as with anything else in technical analysis, the best practice is to couple it with other indicators in order to get true confirmation of a potential trend being at play. I just want to finish off this video by saying that I am not a financial advisor, that it is entirely your responsibility to take ownership of your own investment and trading decisions, and that if you're interested in learning more about technical analysis, about how to read the charts and learn about different strategies, I made an entire 100% free series on my YouTube channel going over all of the valuable information that I've gathered over the past few years. So the link to that will be in the description below. Thank you guys so much for watching, and of course if you wouldn't mind just dropping a like for me, that would be very much appreciated. I will see you guys in the next one. Peace out.